I'm interviewing Charlie Ratner. Charlie has long been considered one of the most knowledgeable technical minds in the area of life insurance and estate planning. In addition to having a law degree from Emory University, Charlie is a COU, a CHFC, and holds the accredited estate planner designation distinguished from the National Association of Estate Planning Councils, where he's also a member of the Estate Planning Hall of Fame. Charlie served for many years as the Director of Personal Insurance Counseling at E&Y. He's a prolific author on how to use life insurance in financial and estate planning. I first met Charlie when he moved to Cleveland in 1993 with E&Y. Since then, Valmark has invited him to speak on member forums and at our member summit. I've had him speak at the AALU meeting in Washington as well. You might have heard Charlie present at Heckerling or other major estate planning programs across the country. I've asked Charlie to spend some time talking about what he's seeing in our business with special emphasis on how agents can be more effective in sales and marketing. Charlie, tell us a little bit more about what you've been writing and what you've been doing since retiring from full-time work.
Sure. Well, first of all, Larry, thanks for inviting me to the program.
Well, great having you.
In terms of what I've been writing about, it's, I guess, as you alluded to, it's the use of life insurance in financial and estate planning. What I'm trying to do is highlight the multifaceted, multidisciplinary nature of that kind of planning. Some of what I write is targeted to agents, but some is to estate planning attorneys and tax advisors. Some is to trustees, and some is to all of the above, because I believe that a lot of those folks are currently talking past each other, and that's to the detriment of their own practices and, of course, the consumer. Now, just to be helpful, Larry, I'll as I go along, I will refer to the title of these articles, which are, in fact, many of them are available publicly on the wealthmanagement.com website. Others are only available to subscribers to Trust and Estates magazine, but the magazine has very courteously allowed us to provide you and your team with copies of those articles for those who want to get them.
Charlie, considering all you've seen and the cases you've worked on over the years and the agents you've worked with, what are the characteristics that make certain agents much more effective than others, especially as it relates to working as part of a team?
Well, at first, at a very high level, there are three things that just always tend to stick out. One is they are students of the business, and I'm sure we'll talk about that. Second, they're great at helping clients understand how insurance can not only help them today, but tomorrow through what I'll describe as a multi-phase financial life cycle. And third, they're great listeners. And they use those skills to know that certain clients will talk to them differently about different topics. And they're adept enough to alter their own approach and act accordingly. They're very astute at that with that skill. Those are the three main things, and we'll talk about them in more depth as we go along.
Well, that's really consistent with my observations over the last 35 years. What does being a student, particularly of the life insurance part of the business, look like?
Well, it's multi-layered in the sense that they certainly understand deeply the services and products that they offer, but it's more than that. They are students of their markets. I don't care if the markets, Larry, are business owners, executives, medical professionals, retirees, landed gentry, you name it. They are students of those markets, and they are also serious students of the life insurance business, and that's broadly defined, and that'll come into play later as we talk.
So what you're really talking about is perfecting a target market. I think I did an interview last month with David Melkin, and it was so clear that he'd done that, or I think the best people in the business. How does that really help them set themselves apart?
Well, what's really special about these agents is if they can sit down with any prospect in one or more of their special markets, and they can describe to those prospects the personal, career, business, financial, and even tax implications of the several life cycle phases, I call them, that generally speaking, each of these types of clients will pass through. Then they can describe the opportunities, issues, and decisions that are associated with each phase, and they can help the clients visualize the desired outcomes at each juncture. These agents aren't just programming needs, they are strategically diagramming. That's a big difference.
That makes a lot of sense. How does this look from the side of view of the client and the advisor when they're talking to somebody like this as opposed to someone who doesn't understand their unique businesses or needs?
Well, the major differentiator is that these effective agents can then take all that I've just described, and they're then able to show how life insurance can play either a lead or supporting role in a lot of those situations or decisions, and how, this is key, having insurance in place today can reduce the expense and the stress associated with some of the major decisions the clients know they're going to have to make in the next phase. By the way, I call that optionality. The agent can point to each of the key issues or decision points along that diagram I mentioned and say, look, if you have insurance at this juncture, you or your family or your business will have the flexibility to do this or that, whatever. If you don't have the insurance, the decision's made for you. There's no optionality. Optionality is available to you today at a reasonable cost. It may not be available tomorrow, and even if it is, it's certainly going to be more expensive. So it's your call. This whole approach, this organized, systematized, and what I call chronologically intuitive approach, I talk about the concepts of visualization and optionality in an article that I call Life Insurance Planning for the Merely Well-to-Do. That's part of the suite of articles we're talking about there.
That makes a lot of sense to me. We see policies over a long period of time and the needs change. It might have been to buy out a business partner, but then later on it's to pay estate taxes. So there are well-designed policies do give clients a lot of choices. Let's talk a little bit about this differentiator of listening skills, and how does that create an advantage for we'll call it super agent, or as I used to say, life insurance superheroes?
Well, this is an interesting thing I've noticed over the years because I work with clients in a lot of different markets and a lot of different cases. The most effective agents know that different types of buyers tune into them on different frequencies. Just for example, the client who buys for traditional financial security or state liquidity listens for very different things, asks very different questions, and speaks in a wholly different dialect from the buyer who's going to use that policy for investment, which a lot of them do. And that's also true for the advisors that these clients bring in on the cases. The effective agent always gets on the right frequency and has the agility, or should I use the term bandwidth, to stay with the client when the client adjusts that dial. I mean, not that ever happens, Larry, but should it? The agent is always able to stay with them. And I should just say something else here. We talk about listening skills. There's one more skill that's important, and I call it rephrasing, a rephrasing skill. And that means that agent you're talking about has the ability to take what they heard and then, with an economy of expression, play it back to the client in a way that the client can understand and acknowledge and then move ahead with. That's a very special skill. Not many people have it. I'll close out this question, I think, but I've just got another observation. Two of the many benefits of an approach like this that is organized, systematized, and yet intuitive is that one, it enables the agent to show how one policy can efficiently serve more than one objective. You mentioned that, but that's a skill to be able to show that. We'll talk about that a little later.
Mm-hmm.
The second thing it does, it very subtly lays the foundation for the agent's product recommendations, which save the agent enormous amounts of time because they don't have to backtrack when they're establishing the basis for the recommended product's suitability, something you hear about a bit these days. And I address this in my most recent article called A Conversation About Life Insurance Products for the Merely Well-to-Do.
Let's now turn to how agents can be more effective in those cases where other advisors are involved. And here, I'd like you to focus on two things. First, how do you position the insurance in the planning process? And the other, once it's positioned, how do you present it in such a way or ways that the insurance can be structured and paid for?
Well, there are basically two types of cases. Cases where other advisors, meaning estate planning attorney, accountant, tax advisor, any kind of consultant, the cases where they can be involved, two kinds. One is where the mission is to develop a comprehensive plan and the insurance recommendations flow from the analysis. And we'll call that a planning-driven case. I'm just doing that to show there are no bounds in my creativity.
Okay.
The other is more what I'll call a one-off, where this is just a given insurance planning technique is being proposed on a standalone basis. It didn't come from a plan, it's standalone, and the client just wants the agent to run it by the client's advisors. Those are the two kinds of cases I think we should talk about.
Charlie, I've seen both kinds, and when some people hear the term one-off, they might think gimmick, but that's not always what you're talking about, is it?
Oh, no, it's not. I am strictly talking about those cases where the insurance may be nice to have, but there was no need for it per se, and it didn't come from a plan. The technique is more intended for a tax advantage wealth accumulation, maybe a pure capital transfer, maybe it's to leverage a charitable transaction or whatever. But that distinction can mean all the difference in the world in the mindset, attitude, and risk perception on the part of the advisors involved. And it can make a lot of difference in what those advisors are going to expect from the agent. A lot of difference between that and the planning-driven case.
So let's focus on that planning case where that, in my experience, that's the larger ones, where somebody's finally getting around to doing significant estate planning or business continuation. Tell us a little bit about how agents can be effective there.
All right, and let's use that, Larry. That would be the model, a business succession type of thing, because it is so common. Everything I've said so far about the characteristics of an effective agent and the things that you've said still apply. But now there's one major add-on, and that's the agent's positioning strategy. I call it the positioning strategy. Agents in these cases have a fundamental choice. They can be proactive or reactive. Proactive means that they see to it, one way or another, that all of the needs and possible uses for life insurance are illuminated during the course of the discussion. Reactive means that they wait until the other advisors do their thing and then give the agent a liquidity prescription to fill. The effective agent is decidedly proactive, albeit tactfully and strategically. The effective agent will never wait for someone else to write that prescription. And frankly, in my view, the client should be happy about that because I think the client is going to be better served. The effective agent, as again, a student of that business owner market that we're talking about, knows that once they get the client to open up, they're going to hear the client talk about problems that are top of the client's mind, many of them, by the way, keeping that client up at night and maybe even causing some friction with spouse, or the kids. That happens. And by the way, estate taxes will rarely be one of those problems.
This is really interesting. In my own situation, I know that to be true. But as I look at presentations that most agents put together, it usually is leading with taxes. How can they be more effective, or how can they pivot on this?
Well, I say that anecdotally. If estate taxes were the primary issue, estate planners would have a crowd control problem. Okay, and I'm not sure that they do. Anyway, what these agents that you're talking about know is that the clients that they're talking about know that life insurance can be the best solution for what I call these seemingly intractable problems. And why is that? Life insurance can do for them what they are not willing to do for themselves. They will gladly part with some cash or premiums so that they can put those issues to bed without losing any sleep, pun intended, about parting with stock, control, or anything else for that matter. I call this use of insurance a remorse avoidance technique, because if the kids stop behaving, the parents aren't stuck with what turned out to be a bad decision. They just stop paying premiums. And you contrast that with asking the kids to give them back the stock. Good luck with that.
Well, Charlie, this makes a lot of sense. It's how I do my own planning. I think flexibility is so important because things change, especially if you're planning for somebody, let's say, who's in their 40s and 50s. There might be another 20, 30, 40 years. So it does make sense to have flexibility.
You know, and what's further interesting to me, because I've seen this so often over the years, is that this use of insurance, the way we're describing it, this is a prime example of where life insurance might be a better alternative for a lot of clients than planning. It's also a prime example of how and where the agent's value proposition could absolutely clash with the estate planner, the other advisor's value proposition. Why? Well, because the agent offers the client simplicity, retention of control, and the ability to reverse course without breaking a lot of glass. The estate planners don't necessarily offer those things. But if the agent isn't proactive, the advisors might do their wealth transfer and estate tax mitigation things and then give the agent the liquidity prescription to fill, if any. Now, look, in a huge case, I'm sure that's going to be just fine. But you know, they're not all huge cases. And even in a large case, the subject of just how much liquidity is needed and for how long can be a matter of, shall we say, extensive discussion, okay? But you get the drift. So proactive is better in the way we're describing.
Well, there is an art and a science of estate planning, and you're really getting to the art. There's no one solution. So if you're working with other advisors, maybe a family office or CPAs or a law firm, how do you do this tactfully? How do you not appear to be grabbing the wheel, but still work with that team?
How about a different metaphor? How about these super agents, as you described them? They know that they don't have to be the quarterback to call a signal. Okay? They've got a different approach, and here's how this works. They know that, and by the way, this could be counter to the culture that many of these agents grew up in, and that it's a big step to run counter to that for a lot of agents. But here's what they do tactfully. They are tactfully assertive enough to say to the other advisors, you know, before we get and dwell on taxes and liquidity, we have some other issues to cover. Those are those not sleep at night or friction causing type things that the other advisors may not get to. Second, these agents you're talking about are really good at pointing out that the creativity of the planning team, and by that you can mean chargeable time, okay? That's going to be called upon to position and pay for one policy in a way that allows it to serve more than one need, including liquidity. A lot of creativity, a lot of planning call for that. This is really smart on the part of that agent because it wraps the advisors into the insurance solution. It generates legal and tax work. And by the way, that's work that has a strong cost-benefit proposition, even for a fee-sensitive client. Third, these agents are really good, and they've learned this, at involving really early on the client's other centers of influence. And here we're talking about the corporate attorney and the corporate accountant, and they build them into that conversation, assuming those folks are in this conversation. And that's smart. It's savvy because these are the advisors who very often understand the client the best. They know what the client wants. They know what the client is willing to do and what the client is not willing to do. And that these advisors, these other centers of influence, will often be sympathetic to using life insurance because it's the least intrusive and the least control disrupting means for the client to get there from here, okay? So they can be very supportive, and that agent that you're describing knows how to weave them into the conversation. It's a certain kind of jargon. Your agent knows that.
Charlie, as we were getting ready for this interview, this conversation was a real aha for me. Corporate attorneys or deal attorneys may be better allies than just working through the estate planning attorneys. Talk a little bit about that.
Well, that's going to depend on the client and the case and literally the makeup of the advisor's firm that the agent's dealing with. All I'm saying, Larry, is that the agent should recognize and take advantage of the fact that the most influential of those advisors around the conference room table may be the ones whom the agent doesn't typically associate with that kind of a case. So to save time, I cover this point in a lot of detail, both practically and philosophically these days, in an article called "The Advanced Life Insurance Markets May Soon Be in Retreat." I really get into that because I think it's an important point that you're raising. So let's stay with that planning-driven case. So the need, or more likely the needs, are established. And now the question on the table is about how to structure the policy ownership and, of course, to pay the premiums. To cut to the chase, let's just assume that the client will use an ILA. If we weren't trying to cut to the chase and we had more time, there's a whole lot you can talk about structuring, but that's for another call. Where the effective agent really stands out is how they present the ways and means of paying premium. Their presentations are one part technical for the advisors and one part intuitive for the clients. The end result is a presentation that wraps everyone at the table into creating the solutions to the client's needs.
Well, how about supporting material for these meetings? What do you recommend?
Well, let's talk about some, I call them rules of thumb for why and how the agent should go about this way for maximum effectiveness. For obvious reasons, the last thing the agent wants to have is to have the client watch the members of the planning team get lost in the technical weeds of a split dollar, for example, and not seem to be able to find their way out. That's very frustrating for the client. The second to last thing the agent wants to do is to try to educate the advisors on sophisticated insurance recommendations or techniques right in front of the client. Does not want to go there. So once all the needs are established, the agent convenes a separate meeting of the planning team to walk through the options. Now, obviously, the agent's going to set the tone and content of the meeting in accordance with how familiar the advisors are with this material.
Well, it really makes sense that you have people who understand this at very different levels, and trying to speak to both of them in the same meeting is going to be frustrating or maybe shake the client's confidence. Boy, the two people I'm working with aren't in agreement. It's easy to see why you want to iron that out offline.
Right. So let's talk about how to set up the ironing board. The agent calls the meeting. The agent works off of what I call a multimedia platform. This will be a matrix, some diagrams, and some supporting illustrations to depict a linear, incremental approach that starts with the legal, economic, tax, administrative components of the techniques in ascending order of complexity. That's an ascending order of complexity. And the agent highlights their benefits and their drawbacks, underscoring all along the trade-offs that are made across the matrix. And by the way, Larry, this should never be a reinventing the wheel every time. This series, other than the illustrations, obviously, this multimedia platform of matrix and diagrams should be right on the agent's shelf, and usually is once they've perfected it. So this is the session that the agent uses to educate the other advisors, surface and resolve any technical issues, and then this is important, get a consensus as to how to present those techniques to the client in a way that's designed to illuminate a path to an informed decision. This is also the session that the agent uses to wrap the advisors into the solution and give them some professional skin in the game. By the way, I should say that, and your agents will sometimes, maybe often, run into some advisors who know this stuff, but even they appreciate the opportunity to be involved, to have input in on how the thing should be presented. Again, you're wrapping them into the solution. So by handling things in this fashion, the whole planning team knows, and they have some confidence in the fact that whatever technique is used, it's going to be because the client brought them there, and not vice versa. And it'll be in the file just in case.
So would an example of that be you might show simple gifting, you might then show something like private split dollar with a loan, and then going out gifting stock at a discount and using those assets to then pay premium. Is that an example of maybe going in ascending order of complexity, advantages, disadvantages, cash flow? Is that what you're describing here?
Yeah, in my mind's eye,
Mm-hmm.
the simplest thing, if I were designing a matrix, is just your point. Is just making cash gifts to the island.
Mm-hmm.
But the second thing in ascending order is that islet, which is no doubt going to be a grant or a trust for income tax purposes. I'm violating my rule against no jargon. The client can make gifts of income-producing property to that trust, because every dollar of premium that the trust can make with its own money is a dollar of taxable gifts the client won't have to make in the future. But it's really only when that stuff reaches the end of its marginal utility should you start looking at loans, because loans are easy to talk about and they're very difficult to manage and they are wicked difficult to get out of. So those are what we've actually done here, just the two of us. We're so creative. By designing this matrix online, you can actually hear the increases in complexity, and you hear the trade-offs. So the straight-ahead gifting may be simple, but it involves more than usually with the kind of cases your folks work on, more than annual exclusions, you're getting into exemptions. But then you go to other things that save taxes today only to create difficulties, and they do, candidly, down the road. Not that things can't be managed, but it's more complex. But the client, because this is part technical, part intuitive, will lead everybody there and not vice versa. And that can be very helpful.
I can see how laying that out, having that discussion first ironed out with the other advisors and presenting the client options increases your chance of getting a transaction done. I think too many people fall in love with one of those ideas, and they're less likely to get a sale if they're just too committed to one of the choices.
Well, I agree with you. Yeah, you're absolutely right.
So we've just discussed a planning approach where we're laying out different options. Let's now go to what we referred previously, the one-off proposed transactions, where there's you should do this, fill in the blank, and then the advisors are brought in to opine, or the client says, well, what do you think Mr. CPA or Mr. Attorney, or let's talk about that.
Yeah, and again, I really want to underscore this because this is a situation. These advisors have not worked with the agent in the development of a plan. Okay, nothing, no needs have been shown. It's just a different situation, and the client's been given a proposal, and just as saying to the advisors, one simple question: does this work? Now, we both know that the advisors don't hear one question; they hear two.
Mm-hmm.
Does it work? And can we sign the tax returns? The effective agent approaches these cases in the way that the agents do in my articles. One is a sound approach to composing a melodious life insurance presentation. It took me a while to come up with that title, but I think it works. And the other is advisor collaboration and intergenerational split dollar plans. I'm not plugging those plans, but I talk about how to address the things, the components of that plan in a way that the advisors can understand. Actually, those articles were foreshadowed a couple thousand years ago, I think, by Aesop with his fable about the north wind and the sun. And if you're not familiar with that fable, just look it up. You'll see what I mean.
Well, that really helped illuminate, just as we talked about this, the one approach of it's planning. Here are all the options. The second one, here is an idea. Let's talk a little bit about this environment we're entering soon, particularly with maybe sunsetting of estate tax or not sunsetting. What environment or what opportunities do you see for the best agents, and how do they capitalize on these opportunities?
I've thought about the word environment, and I think it represents the confluence of demographics, conditions, and attitudes prevailing in an agent's market. Remember, it's market specific, and at any given time. I think it's fair to say that agents are being called on today to provide their products and services to clients with about as diverse a range of attitudes and concerns as I have ever seen, Larry. Some care about legacy, some really don't. Some fear the financial implications of dying too soon, and some are scared to death about living too long. The permutations are infinite, but they're all looking for help. And you know who else is looking for help, Larry? Those clients' advisors are looking for help. And that's because these things may surface in conversations that the clients have with the advisors, but the advisors don't have the bandwidth to talk about those questions and address those needs. So they call the agents. I think that qualifies as opportunity. Now, I have some other thoughts about what I might call quote unquote advisor-linked opportunities. One is the life settlements. Beyond their considerable value as an option for policyholders in certain situations, I see life settlements as an area where agents can help estate planners and can help tax advisors and some other advisors expand their services to clients. There's a lot of interesting counseling and planning that's associated with a life settlement transaction. And I know for a fact, because they tell me, advisors want to be more involved with that. And there are various ways, as you point, how to capitalize on this opportunity. Just for example, your agents can offer to do a presentation at an advisor's firm, one of the lunch and learn, or a monthly study group of a number of advisors, because those are a lot of those around. But just a word of caution, okay? Too often what happens is that the agent takes the very same presentation that the life settlement companies gave to them and tries to give that presentation to the advisors. It doesn't work. It's not in the right language. And then the agents wonder, why didn't we get any traction? Okay, there's a better way.
Well, Charlie, that is a business that Valmark helped pioneer 25 years ago. And we indeed do help our firms We have CE approved presentations, and the language is important. For somebody who's seen this a dozen times, we can get stuck in our jargon, and it is important to make it really simple. So let's talk about how you present a topic like this to get better traction. How do you get more people to listen and then remember what you talked about?
I break this, I guess I break everything down into 3 points, but I break this one down into content, context, and cadence. Let's just stay with life settlements as our vehicle. The agent who's going to give a presentation on this topic to a bunch of advisors should talk about a lot more than the transaction and why the agent can get the client the best offer. Frankly, Larry, everybody says that. Okay?
It's not a differentiator.
No, okay. The key is to present the topic in the context of the role that the particular advisor plays or can or should play in that transaction, and how the agent can support the advisor in that role. Because absent that, the advisor is not going to think of that agent when the time comes. So, for example, you think there really are key differences between the way your agent would present life settlements to accountants versus estate planners and versus, by the way, trustees, especially corporate trustees. So an agent who's going to present life settlements to tax advisors had better address the tax compliance aspects of the transaction, not just the revenue rulings, the operative tax guidance, but the nitty-gritty. Because we both know that as that transaction is being described, what's the accountant or tax advisor thinking about? How to show it on the tax return. That's what's going through their mind. So the agent should say, here is the information I'm going to provide you. I know what you need to do. I will be a source of assistance for that. The last thing, and this is a larger topic, but I talked about content and context. I want to mention cadence. And that's knowing how to pace the presentation to give the advisor just the time to process the information and formulate questions. Often this thing it's like drinking from a fire hose, some of these presentations. Slow down, as the Beatles said, okay? And let the advisor think it through, work it out in his or her mind, and then formulate some questions. And by the way, that is not rocket science. It's common sense, so I guess just watch the body language. Yeah, charitable giving, this is interesting. Like a lot of other areas of your practice, there's a learning curve here. And by the way, it is not just about life insurance and taxes. But here again, and I suspect you, have noticed there's an uptick in interest in this topic among advisors. Why? Because there's an uptick in interest among their clients. It is an area that could present a lot of opportunity, not just for client service, for sales, for agents, and it's a great opportunity for networking with advisors. And by the way, this is another great topic for presentations to advisors, but it has to be tailored properly to get their interest and to keep it. It's got to be about them and how they are wrapped into those transactions. Here's a third opportunity, and as far as I'm concerned, Larry, this qualifies as the best all-around opportunity. I just don't think that advisors, that's broadly defined, really appreciate how modern life insurance policies can, in the hands and mind of a good agent, be selected, designed, funded, and managed to serve client needs and aspirations as they evolve. I just don't think advisors get that. It's not their business, not their fault, but I don't think they get it. And that harkens back to my initial comments about the effective agent, but it deserves repeating. So to me, in this environment, it's the quintessence of the agent's value proposition to be able to explain what I just described and the basis for the most outstanding opportunities to collaborate with the advisors.
So networking's always been an important subject for agents who want to work in the advanced markets. What would you suggest these agents can do to network more effectively, especially in an environment where estate planning has not been much of a priority.
Well, I happen to really agree with that theme, and to the point where I've done a number of articles on it. And one is, I mentioned this one, the advanced markets may soon be in retreat. I followed that with the no sunset life insurance paradigm could be accelerating. These are very snappy titles, I hope you agree. And how life insurance professionals can screen estate planners for better networking. I also did getting through a gatekeeper to your potential client, and that's really about internal networking. And finally, for those agents who are trying to network with investment firms that don't currently sell life insurance, or at least not much of it, I did guidelines for advisors interviewing life insurance brokerage firms. But let's get to your question. I think that for agents certainly in the advanced markets, networking is going to become much more challenging for them in the coming years. By the way, if not sooner. Some of that's going to be attributable to demographics. Some of it is going to be attributable to clients' possible reluctance to do more estate tax planning and buy the associated life insurance for that because of what I call the no sunset life insurance paradigm. And in shorthand, what I'm referring to is the client's reluctance to believe that the estate tax laws will in fact sunset after 2025. They've been there and done that a few years ago, and they saw that the fiscal cliff turned into a plateau. So they may not necessarily buy this notion of the sunset, and they will act accordingly. But the bottom line, for purposes of this conversation and for the agents listening, is that some of their centers of influence could become less reliable sources for referral. So agents whose practices are fair to partly estate tax dependent may really want to think about broadening their approach and their skill sets, and at the same time reassessing and maybe diversifying their networking base. So taking a closer look at this. In first year Latin, I learned that all networking is divided into three parts: selectivity, messaging, and coaching. In second year Latin, I learned about a fourth part, and that's called advisor cultivation. But that's a big topic for another time.
Well, Charlie, observing some of the most effective people we work with at Valmark, this idea of fee-based or fee-only investment advisors, family offices, if producers aren't including that, they are missing a huge market. It does require doing things differently and speaking their language. But let's talk what makes the ideal center of influence.
Well, let's start with selectivity, my three-pronged test here. You see that effective agents are very careful to try to network with the right centers of influence, and they will. So they're constantly reassessing, Larry. Mm-hmm. They'll periodically take a step back. They'll take their list. They'll look at each name, and they'll ask themselves, has this person, although I'm sure technically capable, shown me in real time that they are strategically positioned and philosophically inclined to bring me into the conversation as early as it's appropriate to do so? Because it's not just getting the referral, it's getting in there at the right time to be effective. Mm-hmm. If the answer to that question is yes, they go to the next question. Based on my own experience and my observations, and of course, the feedback the clients give me, does this person have the experience, skills, and inclination to give comprehensive advice to clients in my market today? And not all of them do. Not all of them have a broad enough working definition of an estate plan to in fact be meaningful, reliable centers of influence for the kind of agents you're talking about. Now, one resource to help agents with this assessment is my article on screening estate planners. Now actually intended to help agents conduct interviews of estate planning attorneys, but agents can certainly use it as a checklist to assess their current relationships.
Charlie, we really work with some great insurance professionals at Valmark, but I would say less than a third of them really have this down cold and have thought about this as deliberately as you've laid it out. What about the messaging?
You know, Larry, if I look back and if I have to posit one major difference between effective agents and those who aren't so effective, is right here. It's messaging. When I listen to the effective agents, I absolutely marvel at how clearly and concisely they go through, they present their credentials, their market, their philosophy, their process, their methodology, their resources, and their service platform. They are rehearsed, they are substantive, and they are ready to talk about that stuff. I also marvel at how adept they are at tailoring their presentation, customizing their presentation to the practice and the mindset of the particular type of COI that they're talking to at that time. But it's one, I hear them tell the COI why the COI should think of them, when the COI should bring them in, how they would work with the COI on a case. You got to talk about that. And then frankly, the bottom line is why the agent presents an outstanding value proposition to both the COI's clients and the COI, him or herself. That last part is very, very valuable. Where the really effective agents that you're talking about distance themselves from everybody else is how they respond to those COIs, and we know them, who've been there and done that with life insurance. And when these COIs turn to the agents and start doing their own on-the-spot due diligence, and they start asking the agents to really expand and expound on topics like, how do you choose carriers? How do you select and design products? How do you select and design planning techniques? Okay, the really good agents talk extremely substantively about, among other things, all that stuff, but they carefully weave in how their process involves the critical input of the advisors, because the advisors want to hear that.
Charlie, that you just described why we wrote Life Insurance 10X. That's what that book is all about, is just having a plan for each of those components. So how can good agents demonstrate this expertise?
Larry, when those experienced COIs, the ones who really know what they're talking about, turn to what I call trends in the agent's industry that would be of interest to a COI, meaning the COI that they're talking to right there.
Mm-hmm.
The agents know that center of influence is, he's not talking about underwriting, okay? Like a lot of the investment advisors that I wrote about in Tread Lightly with Adding Life Insurance to Your Repertoire, these COIs, these folks, they read the newspapers. They talk to a lot of other agents in the agents market. Their clients are the ones who get those one-off proposals. Other agents are constantly sending them news items, articles, opinion pieces, you name it, that support what those agents do, and by the way, denigrate what the competitors do. And that could be about products and how they're illustrated, if they should be used at all, planning techniques and how they should be designed, if they should be used at all of that stuff. The point is that the basis for this COI's questions about trends, for example, is not just interest, it's concern. It's like about whether they can possibly do enough to be able to tell a client that a proposed transaction works, or that they can possibly sign a tax return. The effective agents are the ones who are ready for this. They welcome the questions because that they indicate that the COIs are engaged,
Mm-hmm.
and they keep the COIs engaged, and they impart confidence for referrals with just plain straightforward, substantive answers that underscore all the gravitas that they built into their original message. It's all synergistic. So again, I'm saying again that the messaging is far and away one of the sharpest differences between the effective agents and the ones who aren't.
But that makes sense. And how can these agents coach other advisors? How can they help?
I watched this over the years. This is very interesting. In my article on screening, I refer to networking as a series of quote unquote teachable moments. The experienced seasoned agents, the ones you're talking about, Larry, really understand, they never underestimate the value that they can add to those COIs practices. And they've skillfully built the benefit of that, I'm calling it coaching, into their value proposition component of that messaging. In fact, you show me an agent who's built coaching COIs into their value proposition, and I'll show you an agent who, as I noted at the outset, is a student of their markets and their business. Isn't that funny how that works? And I'll say also finally, I guess there's a fourth part to networking, and it's something we've been talking about all along on this call. What's a better form of networking than collaboration? Isn't that what it's all about?
Yeah, Stephen Covey talked about win-win solutions. And if we're not thinking about those that we're working with and how they're involved and their risks and concerns, you've missed the most important part. So that really is goes to the center of everything you've been talking about. I'd like to thank you for sharing your thoughts today. I think this is really a compendium of great information that people should go through a couple times and maybe score themselves how they're doing on these different things. And as they come into the new year, think about how improving a couple of these things every quarter to become even better at what they do. So, Charlie, thank you so much for your time today.
My pleasure, Larry. Thanks for having me on the show.